All right. It is the week of May 9th, 2024, and this is the Fight Business Podcast. I'm your host, Patrick Auger, and today we have a ton to talk about. First up, we're going to talk about the TKO Q1 2024 earnings call. A lot of information to unpack regarding the filings themselves, the Q&A portion, some of the answers we got. We can glean some certain strategic information and kind of ideas where the company may be headed. We're going to focus mostly on the UFC side, obviously, but there will be some WWE topics here and there that intertwine, given that they're one company now. So if you're not about the wrestling part, you can skip through that. But lots to unpack regarding that earnings call. A lot of important information that was released this week. So we're going to spend the majority of the episode on that. We are also going to talk about Disney earnings, specifically around ESPN Plus and how it may affect the UFC media rights. Some pretty interesting notes to come out of that earnings call and some guidance that we can take from Disney that may lead one to assume that when they are talking with the UFC about those new media rights, how aggressive they're going to go after them. Also, I'm going to discuss a potential dark horse that may pop up and bid for those rights and kind of get into a bidding war with Disney for them. So we're going to talk about that as well. Um, we're also going to talk about Riyadh season, extending their partnership with the UFC. That's some big news, especially as it pertains to UFC 306 at the Sphere and just exactly what the UFC Saudi Arabia partnership looks like. So we're going to dive into that. And last but not least, we're going to talk about McGregor Entertainment taking a stake in BKFC. A lot of things have been said about this. I'm going to break down my thoughts and analysis on how big a deal it is and whether or not we will see Conor McGregor in the BKFC ring. All right, with that in mind, we got timestamps at the bottom as always, and let's go ahead and dive right in. All right. First up, we need to talk about the TKO Q1 earnings call, and the headline, so to speak, for this call from a investor and executive standpoint is great times. They are very happy indeed with the Q1 financial results. For revenue, TKO made $629.7 million. About 316 of that was WWE. UFC was 313. Usually UFC makes up more of the revenue, but in this particular case, you had one less numbered UFC event, so it's not super surprising that that's the case. It's going to fluctuate, right? Depending on when you have WWE premium live events and UFC numbered pay-per-views. In this case, you had Royal Rumble and Elimination Chamber on the WWE side, and you only had, I think, 4 or 5 events for UFC numbered events instead of 6. So about even. They did post a net loss of $249.5 million. However, the main reason that they posted a net loss was the $335 million that they paid out because of the fighter antitrust lawsuit. So the results of the Kung Lee and Cajun Johnson lawsuits combined together is a write-off, tax write-off, literally it's tax deductible, of $335 million to the fighters to be paid out. Again, not equally. It's based on bout appearance and some other calculations there from what I've seen. So not every fighter is getting an equal share of that. You're splitting it depending on how many main events you were in, how many bouts you had, etc. Um, but if you do the quick math there, right, take that 335 million away as a one-off event, they posted a net loss of 249. You're left with about 85.5 million in net gain, net profit, and their adjusted EBITDA ends up being 282.2 million. So adjusted EBITDA again is essentially talking about if you take away all of the cost of business and one-off pieces, this is hypothetically right what the earnings should be. I mean, it's not, you can't take that as the end all be all, of course, especially because in the accounting world, adjusted EBITDA can be massaged a little bit here and there in different ways. It's still an important measure, but it's not. You don't want to look at adjusted EBITDA and be like, oh wow, they're making this much, and that's it. It's as straightforward as that. There's always some caveats there, right? Nevertheless, this earnings call is definitely a huge win from the TKO perspective, especially because now the antitrust lawsuit is out of the way, has not affected operations whatsoever. So they're going to keep on rolling and making the margins that they're making with no real threats in sight at this point. And the company executives, in fact, believe they did so well in Q1, which I'm sure had a lot to do with the settlement of the antitrust lawsuit and ongoing legal fees and potential damages. But also just from a, business standpoint, WWE was red hot, UFC was very, very hot. Um, that they have raised their overall year fiscal guidance. So the new target for revenue for 2024 is now 2.610 billion to 2.685 billion. The increased target for adjusted EBITDA is now 1.185 billion to 1.205 billion, and the revised target for free cash flow is now in excess of 40%. So anytime you see a company raise their guidance like that, it's always a real good sign, obviously, of health for the company and shows confidence within company leadership that they believe they're going to hit their marks and then some, especially the marks they originally set. And, looking at Wall Street's estimates, right, which is basically what analysts estimate will be reported, so on and so forth. They did a great job of beating those estimates, which is usually cause for celebration. Now, the stock itself, I believe, ended up about even or a little bit down today. We're recording Thursday, the day after. So, it's not a huge pop for the stock like many people thought it would be, but part of the reasoning there is that, um, the future was already baked into this price at around, I think it's $98 or so, because you saw a pretty large jump once the antitrust lawsuit settlement was announced, right? The Wall Street and investors kind of expected that they were going to do better than they initially said. Whether it's, you know, beating their expectations by this much, that much, I don't know that they expected that, but obviously not because you figure they would have revised their estimates. But it's not shocking, right? I know some people have asked me, like, they did so well. Why are they basically staying stable? Like, this is just how the stock market kind of is now. It's much more about future guidance than it is on and future growth opportunities that drive the stock price rather than actual fundamentals. From a fundamental standpoint, this was a huge quarter for TKO in a very positive way. So, yeah, I mean, this is just kind of the world we're in now. Fundamentals don't mean much to the stock price itself, unless you're talking about very short-term, immediate impacts that fundamentals cause operation troubles. But it's really all about the future when you're looking at the stock price. So don't take don't read into that too much. The fact that the price was about stagnant, right? Um, but yeah, again, revenue increased quite a bit year over year, um, and we'll break down from the UFC specific side. Only touch on a couple WWE things here, but that we need to. But for the segment breakdown, which is the UFC side and the WWE sides separately, for UFC, some key notes here. UFC Mexico City was their highest grossing event in Mexico. The Mexico City Fight Night they just had. They talked about Latin America being a key market and having the Performance Institute there. It it makes sense, right? We've been talking about this on the podcast for a while now. Any place that they're building a PI is a market they're trying to move into and grow. If they haven't already moved into it, they're trying to move into it. If they're there already, they're trying to grow that segment because they see consumer potential. So it is not shocking at all when you look at UFC Noche, you look at the push of Brandon Moreno and Alexa Grasso, you look at the PI being built down there, hosting more events down there. They are trying to grow their fan base in Latin America. And it's, they've always had a strong, they've always had a strong support of Latin America, I'd say, from a fan basis, but clearly there's something in their numbers that is showing that there's room for growth there. So they're making that push and they're calling it a key market. So I would expect more fight nights, especially specifically Mexico, right? I would expect more fight nights and more events down there. Don't be shocked if they keep pushing that for quite a bit. Um, for UFC Perth, which will be UFC 305 plus other events, agreement with Perth rather. Um, they've got site fees. There'll be some crossover stuff. I mean, that's another one of these deals where they're making an agreement with, in this case, an Australian state and saying, hey, and city really in Perth and saying, hey, look, we're going to come host a pay per view here. We're going to have at least one fight night here coming up. I don't know what the other event is. It could be a numbered event, could be a fight night, really, depending on, I think, really, yeah, just depending on where things are by the time they're planning out their next events. Because I'm sure they've got the rest of this year's calendar done and probably a fair amount of Q1 2025, I'd guess, in terms of events. At least of like target places, right? They don't necessarily have these all lined up, but they're UFC is always thinking several steps ahead in that regard. So, um, again, they've made this agreement with Perth to do 3 events, one of which is UFC 305, and that is going to also continue with the crossover when you talk about Elimination Chamber, right? Which was also in Perth. At least I'm pretty sure it was. Right? Yeah. Yeah, okay. Yeah, so, I mean, you're gonna continue to see more of that, I'm sure. And that is not necessarily a key growth market, but a key market that they've but, yeah, well, you know what? Yes, I would say it is a key growth market because based on the actions the UFC has done as of late, between having, some fight nights down there, pay-per-views down in Australia in general, they see that as another place where they can continue to get these site fees, continue to get growth, and really, it's TKO in general is in an interesting position because international events are doing just gangbusters right now, right? When you talk about WWE, they broke records for Elimination Chamber. They had Backlash France recently, which was huge. It's doing these one-off international events and kind of circling around. The fact that they haven't gone to these places pretty much at all or very rarely is really driving um, that scarcity, right? Of we haven't been here. It's not like you go see a UFC or WWE event every weekend in that country. And so as they make these rounds in Europe, Australia, I'm sure they'll continue to do, the Middle East, which we'll talk about here in a minute. They've talked about Africa, right? As they continue to do this, it's really pushing up live event site fees as well as ticket sales and just overall fan enthusiasm. They're going to keep doing this as long as they can keep raising these site fees. And right now, tourism boards are just spending like crazy. I don't know the specific rationale behind that. I don't know the overall macro conditions that are spurring that, but it certainly seems like these places are just dishing out money and cash internationally and domestically in some cases, but just are dishing out cash to host these events. So that's a big deal. You've got some crossover happening between the UFC and WWE, right? Between some of those site fees with Perth and things like that, but then also the Apex, and that being a pretty big deal. Uh, NXT is hosting an event in the Apex, and something that was brought up on the Q&A portion of this earnings call uh, by a media member was, or an analyst rather, was, is UFC going to go back out on the road? Why are they continuing to do Apex events so far after COVID? And the CFO of TKO answered um, what I've been saying for so long. I've been saying this for years. it's far too profitable to not do Apex events. You did have Mark Shapiro then come in and say, if we can get the money, or if it's a tie between going out to the live fans and Apex, we're always going to lean traveling. But the logistical cost, the production cost, everything is so much cheaper at the Apex. It gives them way more profit because so much of each event's revenue comes from the ESPN media rights deal, right? Every event is given a certain amount of money. And if you can cut costs by hosting some of these Apex cards where we're scratching our heads at who's headlining them or who's on the card, and it's mostly Dana White contender series people. You're not having to pay for a ton of logistics and production, like getting a cage across the country or internationally, and getting a whole crew to set up and tear down all that fun stuff. You're really just paying for your at home production people, your commentary, and then fighters who are almost certainly depends on the fight, right, or fight night, but they're not making tons of money. Your fighter or athlete costs are very low generally for these Apex cards. And then you get money from VIPs who want to have that intimate, VIP Apex experience and are going to pay through Endeavor Zone on location service to do this. It makes too much sense. It's never going away. And this was always the plan. And I've said this a million different times, but now I can point to a specific earnings call where the CFO of TKO backs this up. If you don't believe me, listen to the guy who is the chief financial officer of the company of which UFC is a part of, right? They're only going to increase, especially if there's ever a downturn in the macro market, right? Like if we enter a recession or you know, even a mild recession or things like that where consumer interest starts to turn south, you'd best believe there's going to be a lot more Apex events because that's guaranteed high profit. So, yeah, I had to talk about that because I've been saying it for years. It is now backed up by the CFO. I'm sorry. I know a lot of people complain about it. We've talked about it on the show multiple times, but this is the reality. Brand partnerships, huge part of this too. They've talked about from a brand partnership perspective, uh, revenue has grown 28% in some areas, right on the UFC side. They've got new first time partnership categories and vocational training, medical equipment, etc. This is just part of TKO's business, right? This is a big part of what they do. They also talked about merging the WWE and UFC partnerships team into one, which is part of the cost reductions, right? A lot of layoffs on the WWE side, um, which again, admittedly, didn't have the same type of brand partnerships and activations that the UFC had cultivated over the past several years. You're now starting to see the effects of that in WWE starting at WrestleMania. And so Q2 will be interesting to look at the WWE side because they're now definitely starting to mimic some of the UFC partnership and sponsorship angles, i.e., a big logo in the middle of their ring, etc. So that's beginning to take off a little bit. But even on the UFC side, you had a fair amount of revenue growth in that area. And that's going to be something they're going to keep pushing for because partnerships are always an area where you can kind of grow and expand despite your maturity as a company, right? Um, you can always look for new partnerships and new deals and pit companies against each other. It's similar to media rights of saying, hey, a couple companies want to broadcast the UFC, so they're going to fight over how much they're going to pay the UFC, and the UFC will decide. It's the same type of deal with partnerships. You're going to have multiple types of companies that see UFC as a key strategic partner or a way that you know a way to really increase their brand awareness or their especially brand awareness for some of this stuff, right? Like some of the medical device stuff, some of like the dude wipe stuff, like getting a more established name that is open to having you as a sponsor like that. That's a key area where UFC kind of thrives, right? Having like Farmex or whatever, Pharma, crypto even. Although crypto really was all over the sports, but nevertheless, it's partnerships are going to be a key focus from here on out. And they're going to continue to push that because it's a place you can usually always continue to grow. If the market again as a whole downturns severely or there's some other issues, becomes a little bit difficult, but right now that's a key area of growth for the UFC. Um, UFC's adjusted EBITDA margin is 62%, so up 1% from the previous period. So not a huge amount of growth there, but again, still growing. Especially at the numbers and profit you're talking about. Yeah, 62% adjusted EBITDA margin is very good. Very, very good. So the fact that's still going up is a big win for investors and for leadership. Um, Live events as a whole were up 12% despite one less live event on the UFC side. That's big in the sense that ticket prices are rising and people are still paying them, right? Some of the ticket prices for UFC 300, for some of these other events have doubled compared to where they were. UFC Austin, right? I've been to a couple events. I'm lucky enough to go to these events through some connections I know. Could go as media, but I mean, just as a spectator, when I want to go, if I'm talking about buying seats, when I first moved here, 6 7 years ago now at this point, they had an event not long after I moved here. Maybe I forget. It was the one headlined by Cerrone and Medeiros, Yancy Medeiros, and ticket prices were not bad at all. We got pretty solid ticket prices. I think we paid maybe $80 a seat or something, and we were not in the lower bowl, but like the lower half of the upper bowl. It was not bad. And around that same time, went to International Fight Week that year with Cormier versus Stipe, and I think paid around $200 or $300 for the first row of the upper bowl, something like that. I mean, forget those prices now. Given the seats that we're looking, I mean, double, triple that. It's crazy. But again, consumers have the appetite for it, so it's something. Whereas tech jobs and all these other things have really pushed salaries higher. I mean, people are paying it. Up 12% despite one less event just is a highlight there. And they're going to keep raising prices until they find that spot where suddenly consumers kind of push back and they don't have big sellouts. But right now, I mean, they haven't hit that point yet. So they're going to keep raising it. Um, Media rights decreased by 4% because they had one less event. That's not a big deal at all. It's just a numbered events thing. Um, Lower directed operating costs, marketing, production, athletes, again, driven by one less event. They did say they have 2.75 billion in debt. So that's important to note, right? Um, we always talk about when Endeavor bought the UFC, they had 5 billion. And when they, spun off the UFC into TKO, offloading a lot of their debt was part of that. The fact that TKO, has 2.75 billion in debt kind of highlights how much of Endeavor's debt was the UFC in that purchase. That being said, again, the margin of profit that they're bringing in right now and the free cash flow amounts they're targeting of 40% or so gives them options to either pay down debt as if interest rates continue to rise or become an issue, or they can look at mergers and acquisitions, which we'll talk about here in a little bit. So they've got options. It's not a scenario where, hey, we've got 2.75 billion in debt and then we are barely making a profit compared to that. No, they're making more than enough profit that if they wanted to, they could put a majority of that to pay down debt. Now they won't, most likely. They've talked, in fact, about, they were asked on the call about working towards, the 2 to 3 times debt leverage and working up at that higher end of 3 times debt leverage. And um, they firmly believe, just because of, the media rights deal landscape, how well they're doing now, their increased guidance and all that, that they can work at the higher end of that debt ratio, because they 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 have no reason to believe that this money train is stopping, right? The biggest threat to this entire thing was injunctive relief from the UFC antitrust lawsuit, which did not happen. And we talked about why in terms of the fighters saying, I forget who it was Nate Quarry specifically, but the fighters involved talked about this, where they would have had to refile. There were no guarantees. They wanted to, been 10 years, they wanted to kind of get something for all this effort rather than roll the dice all again to redo discovery, redo all this stuff. It could extend the case on another 5, 10 years. They weren't willing to go through with that. So they opted instead to take this monetary relief, which again, for the fighters themselves, anybody involved in that lawsuit should still get, a sizable amount of money. It's not one of these class action lawsuits you're getting like a check for $5 or whatever. Should be a sizable amount of money, regardless of where you are in the bout class. But it's still not going to change the machine itself. And when you look at external threats or competitive threats, there's really not a lot out there that could threaten the UFC's business model at this point. Um, at least in the short term, right? 20, 30 years, a lot can change, a lot of different things could pop up, etc. I mean, even shorter than that, some new force could disrupt it. But for right now, I mean, they're sitting very pretty and they have no reason to believe they won't be in the next 5 years. So I don't expect them to pay down debt. I expect them to use that free cash flow um, to look at more M&A stuff, look at different properties and things they can buy to help increase their overall asset value and really work synergistically. I mean, that being said, the MotoGP bid was brought up, right? Where TKO did attempt to buy MotoGP and then they lost out to Liberty Media. But it was kind of asked, like, you know, you saw synergies there, all that stuff. And I forget what the specific answer on the call was, but the answer plus just what you look at from a outside perspective and business analysis perspective on this, right? Is Moto GP is another scenario um, where there's a good chance they could have gotten high profit margin. And that's really something that TKO will continue to look for. They said specifically they're going to be, very strategic and mull over opportunities like that carefully. They're not just going to go on a buying spree. It's not going to be, which kind of hinted at, they're not going to be an endeavor. They're not going to go out and buy tons of companies, make all these offers. They're going to be very careful and deliberate about who they look at potentially acquiring. But MotoGP, I think, was another opportunity for TKO to add to from a sponsorship perspective, right? From a partnership perspective, I think that's a market they probably saw enough overlap between WWE and UFC that okay, we could go out and we could acquire MotoGP and then look at building up the same type of partnerships and brand sponsorships there. We can make a very high profit margin just based on the way that works. Um, I think that was the idea behind it. I don't know if there are gonna be too many other sports out there that can support that similar type of, um, value for TKO, but that's the type of stuff they're gonna look for. Um, and I assume that's where a lot of their free cash flow will go. If they don't find those opportunities out there, then yeah, maybe they pay down debt, maybe they do a dividend or 2 to make investors happy, right? Do share buybacks, which they've already done some of, because that increases the overall stock price. But I feel like that's where a lot of their free cash flow is probably that's what it's earmarked for. Um, they said the second quarter revenue should be the highest revenue of the quarter. They always say like you shouldn't really evaluate us quarter by quarter, but they they specifically called out that Q2 revenue should be the highest and should be much better than Q1, which makes sense, right? You're looking at WrestleMania, you're looking at UFC 300. hit revenue. That's not shocking at all. Um, they talked about Saudi Arabia quite a bit, right? And we're asked about it. And I think some of the stuff was telling. We'll get into it a little bit later when we talk about the Riyadh season extension. But one thing that caught my interest was when asked about, the Saudi Arabia partnership and kind of where they were going there. They talked about how on the WWE side, Vince McMahon was such a key partner, but then, with the transition of McMahon leaving, Nick Khan was a key player in that. They talked about Dana White being open to it and doing one of it and all this stuff. And now obviously you have an extended partnership. But they also were very careful to mention and purposely mention, mind you, um, the DTC, the Dubai Tourism Commission, right? That's who they UFC made their initial deal with, right? To bring events over there, host events. Um, that was a huge part of them moving into that market, with a focus on bringing the sport there and doing the whole indoor arena stuff, and then Fight Island with all that fun stuff during the pandemic. Um, so the fact that they brought up DTC despite Saudi Arabia and that they've, been in constant contact with DTC, I think was a purposeful remark to say, yes, we are now doing a deal with Saudi Arabia, but Dubai has been a great partner for us and we have run this by them. This is not a, hey, we're just making deals with everybody and this might upset them. We've talked to them about this, we've done all this, which is important because they want to keep that relationship very strong. That's their first and main foothold in the market. Saudi Arabia is now an extension of that, but if you had to have Saudi Arabia versus the Dubai deal, I think they're going to go with the Dubai deal all day. That would be my guess. Um, that being said, Saudi Arabia is obviously a new path for them in the Middle East. And as the Middle East continues their, yeah, I mean, you could call it sports washing, you could call it consolidation of hosting giant sporting events, whatever you want to call it, tourism run. They've got a lot of money and they want to bring these events there. They've talked about bringing WrestleMania or Royal Rumble there. I don't know that that will happen, but you've obviously got, Saudi Arabia doing a pre-existing deal with WWE, and now they're bringing the UFC over. Um, it's interesting. Another thing that piqued my interest was specifically how they mentioned they almost built a performance institute over uh, in the Middle East. They don't know if he was specifically saying in Saudi Arabia or Dubai, but as we just mentioned earlier, if the UFC is building a PI in a particular region, it's a region they view as a key market for growth, right? Um, Mexico, US obviously was their first one, kind of their trial run and part of their growth, sure. But then look at where they've built since. Mexico, China, those are places that they really want and have openly said are key markets for them. They really want to grow the sport. They really want to grow popularity. They see a consumer that's willing to purchase that product, hopefully at a increasing rate as they increase prices. So the fact that they mentioned possibly building a PI over there is interesting because again, they see it at least as, or they've evaluated it as a potential key market, which makes sense given the amount of money that's over there, right? But I think maybe one of the reasons they haven't yet, at least, is a lot of that money comes from specific tourism deals or deals with the kingdoms, right? Where that's where a lot of money is consolidated. It's not necessarily the ground consumer, but we'll see where that goes. Don't be shocked if they don't, if they end up building a performance institute out in the Middle East, whether it's Dubai or Saudi Arabia, in the next several years. If that's the new PI that they're working on, I would not be shocked at all about that. Um, Media rights discussions. that Q&A was interesting because they were asked, would they prefer to stay with ESPN? Would they, be open to wherever? Um, I mean, essentially, they're not even, they're looking at having their first discussion around media rights in Q1 of next year. They pretty much hinted at that when that would have the window where they could kind of discuss that a little bit further and have more serious negotiations. They hinted at ESPN being someone they preferred because of this is the name of sports and all this other stuff and Disney and their relationship and all that fun stuff. Um, but when they were asked about, splitting off their rights to multiple partners, similar to what the NBA is talking about and they're currently going through, they weren't dismissive of it in a way that they were like, oh yeah, we'll definitely do this. Or they also weren't like, no, no, we just want one partner. They were certainly open to it. They were not dismissive of the idea at all. So I think it's going to come down to the offers, of course. But they, executive leadership did a good job at praising their current partner while answering the question that yes, they are not, beholden to this one partner. They are keeping their options open in a respectful way, right? So nothing super surprising there, but we will talk about that here when we move on to Disney earnings. Um, and yeah, those were the main highlights of the call itself. Operating at 3 times leverage again. Um, the fact that they're generating such an amount of free cash flow, right? 40%. That gives them confidence that they can operate at 3 times their leverage. And they're in a position where this quarter couldn't have gone much better for them, right? If you look at the pay-per-views they put on, reception fans gave that. I mean, obviously, fans have been complaining. Hardcore fans have been complaining about events for a while, especially Apex events. But the pay-per-views were all pretty universally praised. UFC 300 obviously was great, and that's not even reflected here. That will show up in Q2. But they mentioned UFC 300 being a big win on this release, so that's important because I think that gives an idea of you know just how successful they see it as, and that will be a big part of their Q2 earnings. Um, but overall, yeah, it's hard not to look at these numbers and look at what they're saying and not see even a little cockiness in some of the you know, discussions, especially around media rights, some of the other things. I mean, they were asked about media rights dying and all this other stuff, and they essentially said, "Well, look at the NBA, look at NASCAR. We have something just as valuable. We will." You look at these giant increases, and people said these increases wouldn't be happening because of the landscape. Look what they're getting. We're on fire. We're doing extremely well. We're going to get those rights increases. Um, and yeah, they have reason to be cocky. They did extremely well. Uh, and again, I'm trying to think about risks, right? Overall, from a strategic perspective, there's not a lot that come to mind that would really hinder the way that the UFC side of the house is doing business, at least, right? And you look at some of these crossovers of getting site fees, of doing these dual packages of, here's a weekend like Anaheim of UFC. What was it? UFC 298 or 297, and then a Raw Monday Night Raw the next Monday, and to try and increase that crossover of fandom, you have some of these, the Raw announce desk at the activations before a UFC pay per view. Like you're doing a NXT event at the UFC Apex. I mean, that's going to save you a ton in production costs, especially when, from an event standpoint, right? NXT is not nearly as popular as Raw, SmackDown, or their premium live event stuff. So you're probably saving and getting a higher profit margin because you're going to save on costs. Depends on the particular NXT show, but I mean, they've run a couple here before, and like it's not like they do poorly; they do well. But I'm sure you're making a higher profit margin by running it at the Apex instead. So I wouldn't be surprised if you get more NXT shows. I'm sure they'll still do certain um, premium live events one, whichever one they do around WrestleMania, they'll continue that one, of course. But there'll be a couple, I'm sure they keep pushing. But yeah, they're going to probably do more at the Apex because it will get them a higher profit margin. It again, hard to look at this call and look at the financials and not think outside of the antitrust lawsuit, which yes is a hit and a substantial hit where it does affect their books. But I mean, again, 3 separate installments, all tax deductible, and the machine is still pretty much untouched on the UFC side. Very hard to not count that as a major win for TKO in the UFC. So I would say I don't know that this will be their best quarterly call, but it's definitely for a new company that just came onto the scene. It's hard to get off to a better start, right? They haven't had too many of these. They've only been officially merged into one company, you know, for less than is it less than 6 months in terms of financial reporting? Might be. It's less than a year. Go with that. It's easy. Uh, they're starting off on the right foot. That's what I would say based on this call and based on the notes I'm getting. And you're hearing cockiness from executives. That means they're doing real well. And I'd have to agree. Let me know your thoughts on these notes. Anything if you listen to the call, let me know or listen to the highlights. Would love to hear that. For the WWE side, I always recommend checking out Pollock and Thurston. I'm pretty sure I saw they're doing yeah, no, I definitely saw they're doing an episode on that for the I guess we'll have some overlap, but they'll hit the WWE side much more. Um, but yeah, again, from a UFC perspective and an overall TKO health perspective, hard to not be happy if you are a TKO investor. All right, next up, we need to talk about another earnings call, though we won't go into this one nearly as much. And that would be our good friends at the House of Mouse Disney also had their earnings call this week. And it was an interesting one. Post earnings call, Disney had their worst day as a stock in quite some time, over a year and some, uh, caused a pretty big slump. And what I want to focus on from the Disney earnings call, because they talked about their park revenue being a little bit, down and might be softer guidance and all that stuff. We don't really care too much about that here at the Fight Business Podcast, but we do care about their streaming business, specifically ESPN Plus. So, a big thing that's been going on with Disney, and we've talked about this on the podcast over a couple episodes, but just to recap, right, is this transition into streaming has been pretty huge, right? It's been a pretty big push and deal. Uh, Compared to their linear cable stuff, which the industry has been used to for quite some time. And so we are now in, I would say, the final stages of that transition with the announcement of ESPN streaming, a standalone streaming service, as well as the joint streaming package of sports, right, with ESPN, Warner Brothers, and Fox kind of all coming together. And now another announcement made today in regards to Disney Plus, Hulu, and Max, I think, are available all together. We're in the end game of these companies making the full transition to where cable will still be around and hang on for a little bit while longer, but they're really going to be secondary to streaming, as opposed to cable was always the main profit driver, the main person you had streaming kind of on in the background where you were building. We're finally getting that crossover coming. And so when you look at Disney's earnings, a huge thing to point out is that Disney Plus and Hulu itself were profitable for the first time, I think maybe ever, where combined of just those two, you've got $47 million in profit, which is big. You had a increase in subscribers for both, I believe. Definitely did for Disney. And you had a net profit, something that CEO Bob Iger was brought back to do. Because you had the other Bob, Chapnick, who was essentially taken out succession style, or I don't know if it's succession. Definitely a corporate coup on a Sunday night to be replaced by the former CEO, by Bob Iger, who has now been in the thick of it trying to turn the ship around at Disney, specifically streaming and, you know, media. That's a huge focus. Yes, parks are always going to be Disney and all this stuff, but it's really been trying to get that aspect turned around. And when you look year over year, right, if you combine ESPN Plus into Disney Plus and Hulu, you end up with an $18 million loss. And that's highlighting that ESPN Plus is still losing money. But year over year, $18 million loss for this quarter is not bad at all compared to 2023's Q1, where they had a $659 million loss in streaming. So obviously, Iger has done some work uh, that has shaked out in his favor to turn around those losses. You also, at this point, have a scenario where as content is cut, right? Like obviously Marvel's getting cut and all this other stuff. Um, ESPN Plus is still a core and something that Iger has said he doesn't want to sell off, he doesn't want to deal with. But ESPN Plus lost subscribers, which is very important moving forward. So Disney Plus and Hulu up, ESPN Plus lost 2% of their subscribers. It's not a huge amount, right? But it's important, especially when operating income from uh, ESPN's linear network, right, dropped 9%. So even though revenue rose on ESPN to 4.21 billion, operating income dropped 9% to 799, which really just highlights again cable is kind of in free fall and more people are cutting cords, going to streaming. That transition is we're in the end, we're in the end game, right? Of course, Disney Marvel reference. I had to do it. I know it's rough. But it's it's one of these things where ESPN Plus dropping 2% leads Disney to a couple of options. If you're going to keep ESPN Plus, or and obviously they're going to do ESPN on its own, but if you're going to keep ESPN Plus and have that either combined into ESPN or what have you, and do all this stuff, there's not been enough appetite of your sports offerings to encourage growth on that particular service. And that's a problem because you are currently competing with every other tech streaming giant out there, right? For live sports. Apple has some baseball stuff. You've got TNT and Warner Bros. Doing their own baseball and basketball. You've got Amazon in the mix now going after basketball and football. You've got Netflix doing WWE and who knows, like F1, who knows what else they'll try and get into. They've said they don't want to get into live sports, but it's not the fact they went after WWE kind of tips their hand a little bit that maybe they do, or they're at least open to it. So you are now fighting tooth and nail and ending up with these split rights packages where you may still get rights to something, but you get far fewer games. You don't get maybe the playoffs or the real big important stuff. That's making it hard for you to compete, right? Especially if you look at ESPN Plus's offerings, they've got a lot of college stuff. They've got the occasional baseball game. Um, they've got good niche sports for sure. They've got some golf stuff, but their bread and butter for ESPN Plus is UFC. And the fact that UFC cards, again, are, especially the ESPN Plus exclusive ones, are becoming more Apex events, are less fun to watch from a hardcore fan perspective. UFC gets to make the decision on what content they deliver there. Uh, I mean, that's a concern. It becomes an issue if you are Disney and you're trying to figure out what to do with ESPN Plus and help it grow. UFC can put on these Apex cards, and I don't. Again, given the hardcore fan base, right? I don't think you're losing a lot of hardcore fans. Um, yes, people complain about the cards. They may not watch them as much, but I mean, hardcore fans are going to be hardcore fans, and they're probably going to watch. That's their whole sport, so they're going to watch them when they can. They're unlikely to cancel subscription. However, ESPN Plus has raised its prices and continued to raise its prices. And that might be getting to the point where some of those hardcore fans might be saying, these cards are not good enough where I care about watching every week. I'm going to want to watch some weeks. I'm going to maybe watch pay per views. I'm just going to pirate, or I'm just going to figure out other, watch with my buddy's house or something. Or I'm going to try and maybe share a subscription with friends so that we're not paying so much. It could be a lot of things, but ESPN and Disney, at least from the ESPN Plus perspective, are in a bit of a bind. If they were to lose the UFC rights, I think ESPN Plus subscriptions would plummet. I mean, right now, given how many subscriptions were spurred on by UFC signups alone, plus the multiple reports throughout the early years that Disney was very happy with the UFC given the growth in the app that was directly tied to UFC viewership. You now are basically that's your crown jewel of ESPN Plus, not ESPN as a whole, ESPN Plus. If you lose UFC rights, I think this ESPN Plus collapses a bit. And you may at some point, if that happens, you may decide to just opt to roll it into your ESPN streaming service all as one. And maybe that's an end goal. Maybe that's something they want to do, but I can't. I mean, honestly, I can't imagine they want to do that. They might be okay with doing that. Is a better phrase. But this makes things very interesting because I've said multiple times I do not think 2x is possible for UFC media rights. That's what they're expecting. They've talked about it. They want to get 2 times what they're getting now. ESPN is already paying, and Disney is paying a ridiculous amount of money. I didn't think 2x was possible with the softening media rights market, which is still softening despite some of these deals. But I think what the market has shown, especially with NBA and NASCAR, and we don't know exactly how the NBA deal is going to shake out, but it's looking at near 3 times, which is something that they mentioned on the TKO call, right? Like people laughed at that number or they kind of scoffed at it, and looks like NBA is going to get around 3 times. The sports media rights market has softened quite a bit, but it really has softened in a way where if you've got it's softened for those rights that are not growing or of extremely high value. If you're in the top value bringers in terms of viewership, in terms of demographic, ad revenue, all that fun stuff, you are still getting increases. You may not be getting the increases you'd like, right? I mean, you look at Raw for WWE and TKO, that's not the ideal um, increase, right? I think it ended up being like 1.3 or something, and they were aiming for 1.4, 1.5, and they got 1.3 ish or something like that. Um, and for a long time, it locked into a long contract, which again signaled to me that they believed that the overall market would continue to decline, or they just needed that. Well, yeah, they definitely believed that the cost benefit made more sense to lock in at a 1.3x over time, longer period of time versus uh, maybe get a 1.3, 1.4, 1.5 now, and then have to renegotiate in a shorter period where you're going to take a bigger hit. So, depending on the property you have, sports property you have, yes, the market is softening. But if you have a very high value property, it's increasing. And ESPN Plus losing subscribers signals to me that UFC is now more than ever a key piece of keeping ESPN Plus alive. right? If ESPN Plus subscribers go up, let's say the entire streaming as a whole goes up in profitability, which or it turns profitable, right? Which Iger said he believes will happen by the end of the year, and I would trust him on that. But let's say ESPN Plus subscribers going up 5%, 10%, great, awesome. Then UFC rights are still important, but they're not the end all be all. If you're losing subscribers while you're gaining subscribers on other platforms, that signals to me that you're not having content that's attracting new consumers and retaining some of the ones you have. And I would imagine, given the type of content on ESPN Plus, thing that's propping it up right now is UFC. And yes, you probably have some of those, not most hardcore, but tier seven fans who are pretty hardcore, who are tired of watching the Apex events that are like, okay, I'm not paying for this anymore, especially with the price increase. I'll figure it out. And that's part of the subscriber decrease. But this makes UFC, if you're Bob Iger and you're ESPN and Disney and you want to keep ESPN with in the Disney family, which you've openly said multiple times, it makes you acquiring the UFC media rights that much more important. The other piece to this that we need to talk about is Warner Brothers Discovery, which is currently in a battle right now with Amazon and NBC Universal and Comcast for the NBA rights, right? They've talked about it a lot on the wrestling side because obviously AEW, WWE's biggest competitor, is on Warner Brothers Discovery. They're trying to get a big increase. And so there's been a lot of talk about how, depending on where the NBA goes, that will affect AEW's rights. But another piece that hasn't been talked about that much is, and we've talked about it on the show a long time ago, David Zaslav, CEO of Warner Brothers Discovery, has talked about wanting UFC rights, right? He's openly talked about that. If Warner Brothers loses the NBA rights, if they opt, which is right now looking like a $2.8 billion per year package or something is what I'm seeing in regards to looking at NBA rights, something like that. If they end up losing NBA rights, or they're already having to split NBA rights, which is something they are most likely going to end up with, even if they beat out Comcast, they're still going to have Amazon winning with some of the rights there, or they're going to end up with some rights while NBC ends up with some rights that I think I read as a possibility because of the matching rights period. Regardless, they're going to have less NBA games next year, no matter what, pretty much. And they're looking at paying maybe 2.8 billion for their current package. If they lose out or decide not to pay that much for the NBA rights, the UFC is a target I could easily see Zaslav and Warner Brothers going after. Right? Okay, we're going to lose NBA and instead we're going to put 2.5, 2.6 to the UFC. I could easily see that being the case. And then essentially challenging Disney on that front. And that could put Disney in a bind when you look at ESPN Plus subscribership dropping, them trying to turn streaming profitable overall, UFC being a key part of that sports network, that could cause a bidding war between the two. My prediction is that if NBA rights go to Comcast or Universal, NBC Universal, you're going to see Warner Brothers make a bid for UFC rights, and it's going to drive up the rights against ESPN and Disney. And if that happens, I think UFC gets their 2 times rights. If it doesn't, if TNT retains NBA stuff, Warner Brothers gets that done, then I think there's still appetite for UFC for sure, but I don't know if the bidding war goes that high. But if you're Warner Brothers Discovery and you lose the NBA, you have to pivot to something that could fill that void because it's such a key part of your programming. And yeah, sure, AEW wrestling, you can definitely pay a little bit more for, of course, but that's not, it's nowhere near the numbers that NBA is doing. The closest option you would have would to be figuring something out for the UFC, I think, and getting that going. Um, Again, is that going to happen? I don't know, but keep an eye out when the NBA rights decision is made. If Warner Brothers loses those rights, I would not be shocked to see Zaslav make an aggressive push for UFC rights in 2025. And if that bidding war starts between Disney and Warner Brothers, then I think you're looking at, you know, then you're looking at closer to 2 times rights. Um, then again, with the announcement that you're going to have Max and Disney Plus and Hulu together, and then the sports service, which will be, Warner Brothers, Fox, and Disney, that relationship is already complicated, right? Um, you could end up with kind of a partial rights thing or something where you split UFC stuff between Warner and and HBO Max and ESPN and all. Who knows? Could be a lot of things. Um, but yeah, I wouldn't be shocked if they don't enter as a player, given Zaslav openly saying he wants UFC rights and if he loses NBA rights, because he needs to fill the void with something, and it's not going to be NFL, it's not going to be MLB. I mean, they already have a fair amount of MLB, so it's not going to be that stuff. The biggest thing they could probably aim for would be UFC. So we'll see what happens. But important stuff to note, because I've been up very much on the train of UFC not getting 2 times rights. I'm starting to walk that back now, just given the environment and what's going on. We'll see what happens. Let me know your thoughts. Let me know if you think the UFC will actually end up with 2 times rights. If you think I'm way off base here, would love to hear that too. But right now, I mean, it's looking good from a UFC perspective that Disney didn't have the greatest day. All right. Next up, we need to talk about Riyadh season extending their partnership with the UFC. So, looking at an article here from ESPN titled Riyadh season extends partnership with the UFC, will sponsor UFC 306. We have Turkey Al Sheikh, sure I'm butchering it, chairman of Saudi Arabia's General Entertainment Authority, announced Tuesday the signing of a strategic agreement between Riyadh season and the UFC that extends their partnership. Uh, Al Sheikh told ESPN there are plans to stage a major UFC event in Riyadh, Saudi Arabia at the end of this year, 2024, or beginning of 2025. He said the event would be, quote, something big, end quote, in comparison to the UFC's first event in Saudi Arabia, which goes on to say is the Whitaker Chimaev June 22nd card. Riyadh season, an annual state-managed sports and entertainment festival that attracts sponsorships from some of the region's most prominent companies, will sponsor UFC 306 on September 14th, the MMA promotion's first event at the Sphere. So this is important, and I didn't bring it up during the earnings call, but just to circle back to the earnings call segment, um, on that call, TKO executive said that according to Dana, the Sphere UFC 306 was a one and done. This is reporting that Riyadh season is sponsoring that event, which makes sense because I'm sure it costs a lot of money to run an event at the Sphere. Um, the earnings call, they said, well, it wasn't really designed for that, blah, blah, blah. Okay, maybe, but I think that's a huge tell right there that Riyadh season is sponsoring that and paying money uh, for the UFC to host that event. And that might be why it's a one and done, because otherwise it might be cost prohibitive. So I'm not ruling out that they won't go back to the Sphere sometime, but that's probably why they're saying it's a one and done, because the cost will be pretty high and they have a pretty big sponsor doing this now. There's no guarantee they're going to continue to do that. Best to err on the side of caution and say UFC 306 will be the only UFC event at the Sphere. Back to the article. We have, quote, this is a strong message to the market with this UFC partnership. Alex Sheik told ESPN, quote, we are working with everyone. My favorite is boxing, but we will try to make Riyadh one of the biggest cities around the world in MMA. So this, again, kind of highlights something. And Alex Sheik goes on in this article to talk about bringing Royal Rumble or WrestleMania to WWE. Says, quote, we will do big things with UFC and TKO, end quote. Um, This is an important call out again because of the MMA event being held at the Sphere, UFC 306, but then also shows that UFC is extending that Saudi partnership. Not that long ago, Endeavor had talked with Saudi Arabia about doing a partnership, right? And I believe had a partnership in writing and an agreement. And then you had the Jamal Khashoggi killing and all of the scandal with that. And Endeavor and Ari pulled from that, said we're not doing business in Saudi Arabia, all this other stuff, and that led to kind of ice between the two. That partially led to I think UFC making the deal with Dubai, doing the Abu Dhabi events and Fight Island and all that fun stuff. That partnership obviously has changed its tune, and I always thought it kind of would, given the TKO merger, right? You already have um, WWE with a pretty strong partnership with the Saudi Arabian kingdom. Only made sense that UFC would join eventually, and this speaks further to what Saudi Arabia is trying to do. They're trying to make Riyadh and Saudi Arabia a hub for major sporting events, the place where all these events will be held, increase tourism, bring money into the kingdom and visitors into the kingdom to help, increase their image as a sports capital rather than where they currently sit on the world stage is a polite way to say it. So I'm not shocked by this, but it's going to be very interesting to see what that event looks like in terms of um, major UFC event 2024, 2025. We've seen WWE put on, huge events in the form of um, bringing back, right, the Undertaker and the Brothers of Destruction versus Degeneration X, right? You get wrestlers who are long retired come back and make a appearance for Crown Jewel, the event there, and you get the 40-man Royal Rumble, largest Royal Rumble ever, and all these big special matches. And in wrestling, that's easier to do, right? You're able to kind of book a card as you want. You can make the story go however you want. You get bigger stars to show up. That's fine. Um, UFC and fighting, that's much harder, right? It's not impossible, but it's a much harder thing to do, especially just given the way that organizing fights is currently done with trying to balance fighter cost and production costs and all this other stuff. I would imagine they're talking about the end of 2024, early 2025. I would imagine what you're going to end up getting, or the UFC is going to target doing, is not necessarily UFC 300 esque. I don't think that, but I think you're going to end up with maybe a UFC 217 or some of the stronger Madison Square Garden cards we've seen, right? We've seen the UFC go to certain venues or certain areas and have strong pay per view events yearly, regardless of where um, the other events are, right? Or what I mean by that is in any given year, you're going to have a certain number of numbered UFC pay per view events where some of these events you're kind of scratching your head and you're like, what? I mean, like the UFC 297 with Strickland and um, who was it? Strickland Duplessis, right? Like not the strongest card for a pay per view event. 299, a very strong pay per view card, right next to 300, another very strong pay per view card. 301, not a strong pay per view card event. But regardless of when that happens in a particular year, you always get usually, not always, but usually a strong card around International Fight Week and a strong card at MSG, right? Ever since they started going to New York, the MSG cards have generally been pretty strong, at least relative to other pay per views that year. You could also argue Chicago for a while had a streak of them doing big cards in that area. But I mean, it's generally been those two being the main cards you can count on throughout the year to be generally bigger cards for International Fight Week, of course, and then Madison Square Garden. I imagine that should this partnership continue, right? And this seems like a one-off deal at first, where they're going to help do UFC 306, which again will be UFC Noche, be a huge event because it's going to drive. You're almost certainly going to have Grasso, Shevchenko, may have some other. Yeah, I'm sure you'll highlight a lot of Mexican fighters, and you'll end up with some pretty strong fights there because they're trying to go into that key growth market. So that will be a lot of the push there, I'd imagine. But you've got that deal going, and you've got Riyadh season paying for this. Then you also are probably going to end up with a strong MSG International Fight Week type card in Saudi Arabia. That would be my guess. And should this deal continue where they do a once yearly event and they grow that partnership, depending on how this goes, I would imagine, then you're going to end up with that being another pay per view you can count on generally being stronger than not. I think that's really what this signifies, right? I don't know that this is going to be a long term thing. The fact that Dubai and Abu Dhabi, has been a particular home for the UFC in the Middle East, and they specifically called that out on their earnings call. I don't know if a ongoing relationship with Saudi Arabia would rock that boat too much. Um, so I can't speak to that, but I think what you're looking at here is at least a testing of the waters for a Saudi Arabia partnership in the UFC going long term, especially since you already have WWE and Saudi Arabia doing that. That's really what this is. I wouldn't read too much into it beyond that. We'll see how the Sphere event does, and also how the Saudi event, whatever is booked there, does, and kind of the reception, the on both sides, the live gate, I think will be important for both of those. We'll have to see how those numbers look towards the end of this year, beginning of next year. But I think that's really all this is. I wouldn't read too much into it as of right now. It's testing the waters. Again, let me know if you disagree, but that's my read on what this relationship really is. All right. Last thing we're going to talk about on today's episode is the announcement at BKFC Knucklemania 4 that Conor McGregor is a minority owner of BKFC at this point. I should say specifically that McGregor Sports and Entertainment is now an owner, which Conor obviously owns. But Conor's company has bought a minority stake in BKFC. They did a nice little video vignette here. It was a little stiff on Conor's part, but I mean it was a good surprise, you could say. Um, and David Feldman obviously excited about this. Triller is going to remain the majority shareholder of the company. This isn't McGregor buying the whole thing. Um, they've done impromptu face-offs, right? McGregor's been there before. He's done impromptu face-offs with Mike Perry to kind of signal, oh, maybe McGregor and Perry fighting bare knuckle fighting. But this is purely a kind of PR business tactic, I think, right? Not saying that it's not a wise investment. BKFC has done a great job in growing their niche. Getting acquired by Triller was big, especially because of where Triller was. But Triller has been acquired by the LA firm, what is it, AGBA, and Triller's now a full subsidiary of that. Um, I think this was part of cost reduction on Triller's parent company's part. And anytime you can get a bigger name in in the sport or adjacent sport, right? Like, which I mean, it, it's we've talked about what BKFC is to um to MMA, right? It's not a direct competitor. It's one of those substitutes. And it's not so much of a threat that you're going to see it like upset the UFC or MMA in general, where it becomes more popular than MMA, at least not right now. And so with that, you're in a position where this brings a notable crossover name that will hopefully draw in MMA fans because McGregor, there are plenty of UFC specific just Conor McGregor fans, right? Obviously, that's why Conor McGregor pay-per-views do so well. And despite Izzy being and John Jones being stars in their own right in the UFC company, their pay-per-views are always eclipsed by Conor McGregor pay-per-view, right? Obviously, a big reason because there are a fair amount of people that just follow Conor McGregor. So, from a BKFC David Feldman perspective, this is great. You've brought in a celebrity investor uh, who will bring fans who are at least fan of one combat sport that could easily, again, adjacent market that your substitute may be able to get consumers to purchase. And it helps with appearances, right? I've talked about this so many times over the past 6 months, but perception is so much of this stuff. It's a huge reason why startups are successful. It's a huge reason why PFL and One Championship have been as successful as they've been, right? And One Championship is currently now fighting that perception battle and some of its fundamentals. Um, but PFL has continued to make deals, continued to get funding now from Qatar to acquire Bellator and become the clear number two MMA promotion. And it wasn't because they were, fundamentally in the black. It was because they were making moves and showing growth and they had a perception of a growing company. This is a great move from a perception standpoint for BKFC. You have arguably the biggest name in combat sports now backing your product as a part owner, which means he's certainly has an incentive to do more face-offs, to do more appearances at the events, to expose his fans to your product, which again, you're not going to convert all of them, but we've talked about this lately too. It's all about the largest number of exposure and brand awareness so that you want the highest conversion rate possible, but just by, pure raw numbers, the larger experience and brand awareness you have, you should hypothetically be able to convert a certain percentage of that. You just need to have them aware of the product. This helps boost your product out there as something that maybe Conor McGregor fans would like because he liked it enough to become a part owner, right? Makes plenty of sense. From a McGregor perspective, this is something, yeah, maybe you believe in. Maybe you're just kind of diversifying your assets. Maybe it's part of a tax write off, right, for your company. There's lots of different reasons. Um, but this gives him something that he's wanted from the UFC for a long time and has been denied, which is ownership. Right now that TKO is publicly traded, Connor can go out there and buy as much of the stock as he wants, do all that, sure. But he's wanted for the longest time to be a part owner of the UFC, and he's been denied that equity. This gives him equity in a combat sports promotion where he'll have a say at the table. He'll feel more invested and more part of the promotion. It makes a lot of sense. It's something he's been after for a while. So, from a good deal, bad deal perspective, I would say for BKFC, it's a great deal, right? This is depending on how much equity you gave away at what price, maybe not, but from a perception perspective, it's great. And you're still a majority shareholder, which again, uh, it's not it's not as though Triller has been, just making money hand over fist. That's part of why they were acquired, right? And there's still rumors of the IPO. I don't really think that's happening anymore. As their parent company acquired them, right? Like it's not bad. I don't think from a financial standpoint they're giving away a ton of equity here. They shouldn't. Is maybe how I would phrase it from analysis perspective. I think it makes sense. And from McGregor's perspective, good deal, bad deal, we'll see. I would say it's again, depending on the percentage stake and all that, I would say it's probably a good deal if he truly believes in the product and he's wanted a seat at the table. This gives him an option of somewhere to go after UFC, although I don't really see that happening. Honestly, I think the UFC will make him think he'll have too many opportunities if he's going to fight. Right, he's not going to make the same amount of money in BKFC. Even if he were to headline a BKFC pay per view, the amount of revenue he'd have to get from those pay per view buys in order to really make it worth his while. It could happen, but I would imagine he's probably stuck in MMA. But you never know, right? And depending on what he does, this especially, if he starts to fall off more in the UFC, he can't compete as well. We'll see how the Chandler fight goes. But if he continues to lose in the UFC, this gives him a landing spot where he could probably have a couple of fights and make some good money doing it. And again, it just it's just something I take McGregor investing in this akin to a former famous baseball player, for example, Nolan Ryan, owning the Round Rock Express, where you know he is owning a triple A team, which is in the Austin area near where I live, and he owns it, and he's not making money hand over fist on it, right? But like, it keeps him involved in the sport. It's something that's his, right? It's not necessarily all about the money, and I'm not saying he's not making money either, but this is what I akin that to is a popular athlete branching off and doing the next logical thing of owning part of a business that they want to be involved with. And Connor obviously wants to be continued to be involved with fighting. Has been frustrated vocally about UFC not offering him a fight, all of this stuff. I think this is a way for him to kind of continue on in that regard and feel like he's getting something that he's been after for a while. That's my read on the situation. I don't think you're going to see Conor McGregor versus Mike Perry anytime soon or in the B. I don't think you're seeing Conor McGregor in a BKFC ring until in the maybe at the latter end of the next decade. Not well, let me rephrase that. 8+ years is when I would say you maybe see Conor McGregor in a BKFC ring. Could be wrong, but that would be my guess. But I don't expect, oh, he's bought this company, he's doing all this stuff. Like, no, he's not even going to necessarily be a very active participant, other than a couple marketing things here and there, which is already done. Um, it's not some Connor moves to BKFC. BKFC is going to position it as this is a big deal, right? All this other stuff, but it's not that same type of thing. So just it's very similar to Ngannou and PFL in that regard too, I believe, right? It's just similar esque, and it is what it is. So yeah, I that's my call on that situation. Let me know your thoughts, but that's where I read it. All right, that wraps up another episode of the Fight Business Podcast. Make sure to like, subscribe, bell notification, all that fun stuff. If you're listening on Spotify, Apple Podcasts, whatever, always love the audio listeners. YouTube, I already told you to like and subscribe, all that stuff. Uh, we'll be coming back next week, as far as I know. Work has been kind of all over the place, so again, apologize for the intermittentness, but I'm not going to promise I'm back every week, because every time I do that, I never get back every week. But I'm going to try. I can promise you that. So until next time, y'all, get money.